Hi, I'm Dominick Stephens, here to chat about all things economics. Well, if we needed any more proof that this economy is well and truly stalled, it came in today's shocking employment data. Employment fell and the unemployment rate rose to 6.8% within a whisker of the 7% peak from a year ago. We'll chat about that this week, what it means for the New Zealand dollar and the outlook for 2011. Now, we already knew the economy had pretty much stalled through the middle of 2010, but it looks like it's having an even harder than expected impact on the labour market. On Tuesday we had data showing that employment was down about 1%, that the number of hours worked around the entire economy, which gives you an idea of what happened in the fourth quarter, actually fell about 0.2%. Today that weak picture was really confirmed with that increase in unemployment to 6.8 and a 0.5% fall in employment. Now, with all this run of weak data we've been having in New Zealand, why is the New Zealand dollar so high? It's still up above 77 cents against the US. Well, the thing is, the economic backdrop globally has actually been improving through December and January, with a little bit better data in the US and inflation fears emerging in China. It's really driving global food prices up. When food prices rise, New Zealand's commodity export prices rise and the exchange rate goes with it. Commodity prices do tend to drive the exchange rate. Now that's great for many New Zealanders. It means our Kiwi dollars go further and we can purchase more internationally traded goods such as food and clothing and shoes and things. But it also comes at a bit of a cost of jobs. Firms that are competing with foreign imports are really struggling at the moment, with Kiwis preferring to buy overseas goods with their strong New Zealand dollars. That's where a lot of the job layoffs are coming, a lot of the economic weakness. So what does it all mean for 2011? Well, we definitely do think 2011 will be a better year than 2010. That strong exchange rate is expected to persist right through both years, that's fine. But this year, better than last year, we've had better growing conditions so far. Hopefully they'll persist. We've got a World Cup coming up. We've got earthquake reconstruction, and hopefully those high commodity prices will eventually induce those who are receiving the higher incomes to spend, and that will percolate slowly through the economy. So we're still looking for better growth in 2011 than 2010. Talk to you next week.